All right, I'm welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, and subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So markets getting a pretty decent bounce, as I talked about last week. I talked about us kind of going into that 100 period moving average. We have the gap fill right there that we did fill on last Friday, and just kind of going into a little bit of a support zone here. Markets short-term oversold have been pretty much selling off for a couple weeks straight without any sort of bounce. Actually, if we look at the weekly chart, yeah, 1, 2, 3 down into the 20-week moving average, and now we're getting a bid off of the lows. I do think it is not over with. I do think we will have another leg down here at some point, but nothing goes down in a straight line, and you're always going to get counter trend moves here, and that's what I think most of this week was here. So pretty good relief bounce for the market. 1, 2, 3 up Monday, Tuesday, Wednesday. Little pullback Thursday. We had a very stagflationary GDP and PCE core revision. GDP revised down from 2.5 to 1.6 for Q1. And PCE was revised up from core 3.4 to 3.7. So definitely a stagflationary print, spooking the market a little bit there. But then Friday we were able to recover and get a little bit more of a bounce here. So market's getting a bid here. Next area that I'm looking for this market to go, we do have a little bit of resistance here with the 20 and 50 moving average, but right around 51.50. So you're going to see that's where we broke down from. That's the big red, the wide range red candle that initiated that sell-off, or really the continuation from the sell-off in early April. We had the bear flag there, and then we pushed down there. So that's where I'd expect the next amount of supply to be sitting here for this market. We do have a lot of news coming up this week. We had earnings last week. Meta reporting that took a big hit on Thursday, and that obviously helped contribute to that gap down, that little that move that we had on Thursday. I should say Meta reporting on Wednesday afternoon, but Thursday reaction and during market hours. I talked about this in this video here a few weeks ago, but Mark Zuckerberg was selling a lot, and I mean a lot of shares going back to February. Not like 2 or 3 sales. There was about 35 or 40 individual stock sales that he made. That is very, very, very highly unusual. Some insider selling. I talked about that in this video here a couple of weeks ago. But the stock, took a pretty good hit. A lot of it, I think, is it was their guidance. They'd had a pretty good quarter, but companies starting to guide down a little bit now. We did have Microsoft and Google. Microsoft had a nice gap up, although it did not make new highs. Google was the real winner, though, reaching the 170 handle. However, next week we have Apple, Amazon. Those are the big ones. I think there's a few others, McDonald's and AMD and a couple others. But then also we have the FOMC on Wednesday. And on Thursday, we have Yellen's QRA, which will be a big deal if she has to issue a lot of duration. That could suck more liquidity out of the market. And right now, bank reserves are dropping just a little bit, and that's probably contributing a lot to the liquidity, right? I talked about this a week ago. Now all of a sudden the market cares about Iran. Now all of a sudden the market cares about these stagflationary prints. We've been getting these prints for 4 or 5 months now. Stagflation prints. We've been hearing headlines out of Israel and Iran for 6 months. But when you have liquidity dropping, now all of a sudden news matters. But in any case, lots of stuff to move the market next week. I'm not necessarily expecting a drop here next week, although it could happen. But I do think the market gets, stalls out here at some point with a lower high, going back to April. So at some point we will get a lower high. That is kind of my base case right now. And we should see another corrective move. When you have a big wide range outside candle like that on the weekly time frame, it's very rare that it's just going to be a one-off. So it's usually accompanied by something else. Even you can even see, prior to back here, this is just a standard 10-12% correction, but 3 weeks down, a couple weeks up, then another drop down, and then another drop, and then that was it. So I do think we'll see some more downside action here. But right now, Market getting a little bit of a bounce. Again, we'll look at 5150 as kind of like the near-term target if the market wants to continue higher. For the triple Qs, they're actually a little bit closer to resistance than the SPX is. You actually make a case we're into it now, right around 433.50. You know, we could go a little bit higher, maybe 436, 437. Again, this is kind of the zone where we broke down from previously, but look at this. I mean, this is a lot of distribution. We can just clear this up. And again, kind of supporting the case that we should have another leg down. I don't think that they were selling here for, you know, from late Feb until mid-April just to have this, have a 1 week, you know, 1.5 week correction. So I do think that sellers will come back here, and that's again kind of supporting the thesis we should have another leg down here. But either way, support right now, you got the previous all-time high around 408. So we never quite got there. We got pretty close, and then through that, a little bit steeper of a cut would take you down to about 385, 386 on the Qs. Again, we're not there yet. But right now, getting close to resistance here around 435, 436, 437. So right in that zone there for the triple Qs. But decent little bounce here. I talked about this a week ago. ASML and TSM not really having the greatest earnings reports, or not the greatest reaction. TXN did okay though this week, and then Lam Research also did all right as well. So that did kind of help the sector recover a little bit, which did help out technology. But triple Qs here into that level around 435, 437. Russell 2000 also bouncing as well. I still think this can get back to 200, maybe 202. If it really, really gets a good bid, maybe 205. So that's what I'm looking for there. But again, small caps, like everything else, getting a bounce this weekend. Again, we'll just leave it at that. The Dow also very choppy. This was the move in the Dow here. So you notice Friday we did not make a new high to Wednesday's high, as opposed to the spiders and everything else. I think a lot of that had to do with Caterpillar. So Caterpillar, big Dow component, getting slammed pretty hard on earnings. But you can see in any case, I'd still imagine 385 or so is resistance here on the daily, and then you've got the gap fill above that around 388.84 on the DIA. So again, market's still getting a bounce here, but diamond definitely on the weaker side comparatively. Semiconductors, we just touched on a little bit. Again, same thing as the Qs here. You got a little bit of resistance here around 220, and then above that 225, and then the gap fill. But decent bounce there for the SMH. I'm still looking for another lower high here, though. IGV, again, making a slight higher high, but not a closing high, right? So we didn't really take out, I suppose it is a closing high technically, but we did not close above the high from Wednesday, even with Friday's rally. So cloud software is still on the weaker side here as well. If we inch up 83 and then up to this trend line is your next two resistance levels for cloud. Dow transports I do not like here. Very weak. Not participating in the rally. So it's Monday, Tuesday we did, but Wednesday, Thursday, Friday, no follow through. So unlike the rest of the market, this is lagging. And again, I talked about this last week, closing below that wide range green candle, not a good sign for the transports. So I expect them to be laggards here. So not a good look there for the DJT. All right, so interest rates here, again, still sideways on the 2-year this week. And I think this is starting to really creep up now. It's getting very close. We obviously have the Fed meeting. I expect the rates should probably be sideways until then. What's really going to move it, I think, is the QRA, which will be Thursday. But if this 2-year yield starts to break out, and this is why you've seen the market start to get nervous, Fed funds is right here. This is effective Fed funds. So right now, there is absolutely no way they could cut. If they did, the Fed funds would drop below the 2-year yield, which would put them behind the curve on inflation again. But if this starts to creep up and this bull pattern here plays out, bull flag, it's just going to make it even harder. So rates are still holding up here on really all ends. 5's still kind of grinding higher, and 10s and 30s as well. So again, rates still holding up, maybe a little bit overbought here on the long end, but that short end still definitely coiling up. So again, that's causing a problem here for the markets. those increased rates. Again, the market priced in a soft landing and a priced in cut. The market had cuts priced in by essentially now, many months ago, and it keeps getting kicked out. Now it's now to December. XHB with a little bounce this week, kind of on the weaker side. Again, no new highs. So some of these, you're noticing some of these sectors, which ones are weaker and which ones are stronger, right? So all you had to do is just look at relative strength. Here's the SPX, higher high to Wednesday. XHB is one of the sectors that had a lower high. So we'll see if this stays sideways here, it could build another bear base and maybe drop into 96 and then 92 potentially. VNQ, again, same thing. It made a higher high, but no closing high, and still on the weaker side. I still think there's a lot of resistance up at around 82 to 83 on this. So commercial real estate week. XLF here, so very interesting stuff. So XLF last week held up really well. Remember, we talked about that outperformance. And then this week, it kind of showed a little relative weakness towards the end of the week. We did have a regional bank failure on Friday after the close. So they didn't announce this until after the bell. But Republic Bank, not a huge bank. They are FDIC insured, first one in 2024 to fail. It's not a huge bank. They didn't have a ton of deposits, but it's still a bank failure. And it's just never a good sign when you see bank failures in the market. Again, high interest rates, that's causing a problem here for these companies. But you can see the KRE had a little bit more relative weakness. Again, last week they were strong. This week they were weak going into the close. I still don't love this weekly pattern here for the KRE. So something to be careful with there. We'll see how the market opens on Monday. The KBE here, still strong on the weekly. For now, if we break below this level here on a closing basis, then banks are in a lot of trouble. But right now they're trying to hang in there. Broker dealers is up 1% on Friday. That is into some resistance now, but again, the chart's still very strong. Next level is obviously 610. If it gets there, support's around 560. So the energy markets here, they held up okay. So oil was kind of sideways to up this week. So we backed off last week, and then we kind of just grinded back up throughout most of the week here. I'm still kind of neutral on oil right now. It wouldn't shock me to see 78. It also wouldn't shock me to see 90. So this chart to me is very neutral. I'll just say the weekly, I don't like how we closed below that breakout bar low last week. So that's your negative. Your positive is, if we look at the XLE on the weekly is still holding up. In fact, we closed above. That's 2 weeks in a row we tested this high, and then we closed above it, and we're still above this breakout bar low on a closing basis as well. So when you see the producers leading, that's a good sign of risk on. So that would be a positive for oil. And you can see XOP, same thing, essentially back testing this level here and getting a bounce. The OIH is still getting defended at 320, which I've been telling you guys is support. So that is holding up as well. A little bit weaker of a pattern, but it's still getting defended nonetheless. So again, I'm still kind of neutral on energy right now, but it's certainly holding up, and we'll keep a close eye on it. Uranium market, not a lot going on. So pretty much just a sideways to up week here for CCJ. Patterns bullish on the weekly, and the URNM and URNJ are still bullish on the weekly as well, as long as they're inside of this wide range green candle. It's all just weekly consolidation. Nat gas, we had a contract roll on Friday, so that did dip down, and we'll see how that plays out here. So again, basically coming into an adjusted, well, not an all-time low, but multi-decade low, $1.92 on a non-adjusted basis on a monthly. You're gonna see it's still well above the COVID low. We'll see how that does. I know these contract gaps get kind of tricky as far as how the adjustments are made here. We are coming into a seasonally kind of favorable period as well. We'll see if the cure for lower prices ends up being lower prices here, but nat gas still struggling this week after attempting a little rally earlier in the week. We'll see if it gets some type of a bounce here. But anyway, dollar index. So Dollar index still acting well here, and a lot of that has to do with the yen, which we'll talk about in a second. But again, I talked about 105.50 being support. That held, and it got a good bid. It's above the moving averages. Dollar is bullish right now on the daily. I'd give it the upside bias to about 107. I don't think it can get through that right now, though. I just don't. There's just a lot of resistance there. The dollar yen, though, this is the story. Look at what it did on Friday, guys. That's a power move. Maybe even a short-term blow-off move. I'm not sure, but it's just a huge breakout bar, right? This pumped all the way up into the 5 o'clock close. The market closes at 4. Forex market closes at 3, and then we had the futures at 5. It pumped all the way up. In fact, I can just show you. Like all the way up into the after hours, into the last second of the day. This was pumping up. So dollar yen is kind of a runaway train right now. Again, maybe that was a little bit of a climax candle in the short term, but look at that monthly. So big move there for the dollar yen, and you can see, gold priced in yen. That's also running away here. So, are they asleep at the wheel? Are they gonna? I don't know if they're gonna be able to. You think at some point they're going to have to defend their currency. We'll see how long where their pain threshold is here. But certainly a huge move here for the yen that has massive implications. So either way, dollar yen running away. Dollar index, though, again, I'd give it the upside bias to about 107 right now. Gold in dollars did back off a little bit this week. Again, talked about this big reversal candle. We expected the price to cool off a little bit here in the short term. I still think it could be a buy around 22 to 22.50. Silver, same thing. I'm still looking for about 26 or so. I think that's a good buy zone. Here's your big positive. Look at GDX. All right, so 1, 2, 3, 4 up from Tuesday to Friday. SIL, pretty much the same thing. Versus the metals, which, yeah, technically they went up from Tuesday to Friday, but not really that big of a bounce comparatively. So the miners, again, back to leading the metal. Good sign. Platinum continued to languish this week, kind of, breaking through this trend line. Let me fix that. I believe that's adjusted properly, but either way, kind of just breaking through this trend line here. Again, it's still an accumulation. So this has been in a sideways range for a long time here. So again, I'm still liking it here for an accumulation zone. And the same thing with palladium. Yes, it did dip down here a little bit, but I'm still accumulating this myself. I believe this will be a catch-up trade here at some point to gold and silver. All right, so copper continuing higher here. Finally got to that 460 area that I talked about, right up in this area. 461. Maybe it inches a little bit higher here. It is coming to some resistance now, though. So this is where it tried to consolidate in 2022. And that's where it broke down. So that's where the supply should be. It's had a really good run, though. It just needs to, in my opinion, I think it's overbought. It needs to pull back here. But copper, really, really strong. And then Bitcoin here, possibly working on that lower high I talked about last week. So we rallied up into about 67.5, and now we're pulling back here. So again, looking for a lower high, maybe another one. Your support here is 57.5. If it gets through that, it's down to 52. So Bitcoin working on lower highs here. Just be aware of that. Big picture, the pattern's still fine and it's healthy. So again, lastly, again, just wrap up. There's a lot of earnings. Going to be a lot of volatility this week. Apple, Amazon, and plenty of others. We have the FOMC and the QRA on Thursday. So it should be a wild, action-packed week here for the markets. And certainly likely a pivotal point here. But big picture, I'm still expecting some form of lower high here. Again, doesn't have to be next week. But at some point here, I do think we will get one more leg down. Again, like I said previously, I think 4,800 is beyond reasonable. That's really only about 8%, I think. 7 or 8% correction. A standard market correction is about 10%. And we've had a 30% just about rally since, late October. So it's really just a healthy move if that happens. Basically, all you'd be doing is back testing the previous all-time high. Again, very healthy move. If that started to fade, later on, then we can talk about 4,600. I think that's a very good support area as well. But right now, again, we'll see what we get next week. Looking for around 5150 to be some form of a resistance here in the short term. But lots of action going on here, and certainly will be a jam-packed week. So anyways, guys, gonna wrap it up here. Make sure you come find Jason on Patreon. Come find me on carnivoretrades.com. And I will talk to you guys all next week.